mortgage guide. So today we're talking about DTI. So that is your debt to income ratio. So what is that, right? So when you talk to a lender, they're going to look at what is your ratio between the debts that you have outstanding and the income you have coming in. Different programs have different ratios, okay? So you have VA is about 41% or below. FHA is gonna look at about 43% or below, and then conventional is gonna, research will tell you about 36%. Can you have a higher DTI than that? Yes, you can. However, each program is different. Each file is different based on your credit score, right? And other factors that may apply. So again, these are just averages. This is just kind of like a typical, this is what an, FHA, for example, is gonna look at 43% on a typical standard application. They can fluctuate based on other things, okay? So just keep that in mind. But how do you calculate this number, right? So what you're gonna do, right, is you're going to, before you even do any application, is figure out, can you afford this property? Can you afford this home? Or how much can you afford, right? Take all your debts, so credit cards, any loans, car loan, personal loan, student loan, signature loan, whatever you wanna call it. Take all of those debts, the minimum payment, right? So that number that shows up when you pull your credit report, your credit history, that number, take that number, add them all up, add in the cost of your new home payment, because you're not going to have either your current home anymore or you're not going to have rent anymore. So if you're a renter going to a new home, don't use that payment. Add in the price of the new mortgage that you want. Divide that by your gross income. So what is your gross income? That is before taxes. If you don't know what it is, there are a couple of amazing calculators out there that you can, type in gross monthly income or gross income calculator, and you can calculate based on whether you make hourly or salary, or bi-monthly, bi-weekly, however you get paid. Okay, so again, what do? You take all your debts, you add them all up. The minimum payments of all of those debts that you pay monthly, you divide that by your gross monthly income, and then you have to times that number by 100 because you want a percentage, right? Times that by 100, and that will give you your percent. If your percent is anywhere under that 43%, hey, you're in a good spot if you're looking for FHA. Again, VA 41%. If it's 41 or under, you're in a good spot. Conventional 36% or under, you're in a good spot. Again, can you have a higher DTI than that? Yes, you can, but there are certain programs, and it's gonna be a lot of different factors that are gonna depend on whether that will work, okay? So just think about those things, but that is how you're gonna calculate your DTI. If you have any questions, you know where to find me, www.liahjones.com. Continue to share my information. And can I count on you to share this with a couple of people that may be looking to find a home in the next 12 months? Hopefully we'll talk to you soon. Bye-bye. Have a good one.